And joining us now here on the program, let's take a look at CHS's latest fiscal report, reporting 2024 net income of $1.1 billion, and that's compared to $1.9 billion for fiscal year 2023. We're going to talk about the numbers, break things down, and have a conversation today with Jay Debberton, President and CEO of CHS. Jay, good to talk with you again, sir. How are you?
Jesse, I'm well. Good to see you. Good to see you.
Well, let's dive into these numbers. And I mentioned the top line number there, down a little bit from 23, but not far off. I'd say definitely within the ballpark, in the stadium, so to speak here. I guess from your perspective, walk us through the top line numbers and your thoughts on those earnings reports.
I sure will, Jesse. Yeah, we're really happy with good solid results at 1.1 billion. And as you pointed out, that compares with 1.9 billion a year ago. That 1.9 was a record for the company that we've never seen before. Almost exceptional earnings all across our businesses. And the cooperative did what it should. It made that money and it paid it out to the people that did business with us. So anytime you compare with a record setting, it's always not there because it's not another record, but we're really happy with 1.1 billion in this environment that we are in. We had revenues of just under $40 billion worth of sales. That's down a little bit because commodity prices, as we all know, aren't where they were 1 year ago. So we're feeling that. That's agriculture. That's who CHS is. That's the cycles we go through, and we've been doing it for 95 years. We'll do it for another 95 years, and so that's the way we run the place, is knowing that these cycles come and go, and that's what makes agriculture interesting.
Let's break down some of the different segments here a little bit, talk specifically. I know you mentioned commodity prices, of course, and that had an impact. So maybe let's start on the ag side and the ag segment of CHS's business. What were some of the big highlights there, Jay?
So ag had a pre-tax earnings of about $342 million, real solid results, but it is a year different than we had last year. You and I have talked before, Jesse, about soybean crushing and canola crushing and corn into ethanol, which is part of our processing businesses, and those really have been doing well the last couple of years. Things like renewable diesel and other things, big contributors to those results. Those were down just a bit, but we're still really strong. The side probably in our ag side that really did have the wind in its face a bit was our North American grain business, where exports were just light through most of the year, and that kind of global conditions and global trade conditions. But that made our North American grain business more challenging than last year with reduced exports. And then on the other hand, our agronomy business, fertilizer and crop protection products, real strong year, good performance all across those businesses. So I'd say in the ag side, really solid performance. North American grain really feeling the effects of smaller exports.
Since you mentioned fertilizer, I'll go over to the nitrogen production segment. I know the joint venture with CF Nitrogen from CHS. Talk about some of the earnings just specifically on the nitrogen side.
Yeah, so we're going to show $151 million worth of earnings in our production side, which is down primarily because of lower prices in urea and UAN, which are produced by CF Nitrogen. That's our joint venture that we have with CF Industries. Natural gas was pretty constant, but what we all know is fertilizer prices were down over a year ago. So, our margin portfolio within nitrogen production is really composed of those two components. What are we selling fertilizer for? What are we buying natural gas for? And in this particular case, we saw some decreases in the selling prices. Farmers got the benefit of that, and with lower costs. What comes with that then is lower earnings on the production side.
How about the energy segment? Obviously, that's been a area where we've watched, things like crude oil prices, et cetera, and the development of different renewable energies and more. what are the results from the energy segment?
Yeah, so we had earnings in energy of $429 million. So keep in mind, a year ago, we made over just $1 billion just in energy alone. Well, in my 40-year career at CHS, we had never seen those kinds of results. So, what happens in commodity-related businesses is, as we all know, you show real strong margins, the market seems to find a way to compensate for that, and it certainly did in the energy side, where the industry really had a bit more production than demand was, and we felt that in our refining margins, along with some pricing differences in crude oil that we buy. So, but almost $430 million, real strong performance. We're happy with it, but just not what the record-setting results were a year ago. And to your point, renewable fuels, other things of that nature, we've got both shoulders behind that, and think a lot and stay close to an evolving energy platform.
We're talking with Jay Debberton, President and CEO of CHS, here today on the show. Jay, let's just talk broadly here. As you guys close out fiscal year 24, we look ahead to the end of the calendar year. Harvest is wrapping up, et cetera. I always love to throw this question to you when we talk. What's your mood on the overall ag economy and farmers and ranchers? How are things looking, feeling? What's the perception you're getting from customers as we close out harvest and look ahead to 2025? What's on your mind?
Well, I think we'd all have to admit things are much more challenging today than they were a year ago at this point in time, with commodity prices being down significantly, and largely that's due to just full balance sheets everywhere, Jesse. I mean, we've had good production in South America, good production around the world, good production in the United States, and that's just filled up balance sheets, and it's contributed then to lower commodity prices. So input prices they're down some, but cash rents, things like that, are still holding pretty high, and that's, I think, consolidating some of the on-farm income. At CHS, we do better when farmers do better. Our interests are aligned there. So as farmers feel it, then we feel it. So that's, I think we're into a bit of a more challenging cycle. The benefit that all of us have in agriculture is, Jesse, that's what we do. That's what we've had for 95 years. That's agriculture. That's why, frankly, some people aren't cut out for it, because we go through these cycles. And it's also why, a year ago when you and I talked about earnings at CHS of a record-setting $1.9 billion, that's the market that gives us some of that, and a cooperative, it works well, but we're the same company and the same management team and the same staff when the market is more challenging, and we know that comes with the territory.
Does it concern you that we could have an extended downturn in the ag economy here right now, Jay?
It does, but I'd also be quick to say, even this year, and it's a long year, we'll have to see how, we're just getting the crop off the field, let alone think about spring's work and how that might unfold. But balance sheets are full, Jesse, and until either demand catches up or supply has some impact somewhere around the world, I think that's going to be something this market is going to be heavy with.
Jay, good thoughts as always. Appreciate you coming on to walk us through the fiscal earnings for the company. Anything final you would want to leave folks, farmers and ranchers listening in here today? Anything you'd want to leave them with?
Well, I think two things I would is, demand for the products that the U.S. farmer produces is still strong around the world. We're going to work hard to try to keep trade doors open and move the products where the market is demanding them. And then the second thing is still the high confidence level that the U.S. farmer can compete with anyone around the world. That's not an issue. We can compete. We just need trade programs that allow us to compete.
Well, I know folks can find the full earnings report, chsinc.com. They can also find it at agricultureofamerica.com. With that, Jay Debberton, President and CEO of CHS. Always good to talk with you, sir. I'll wish you a happy holiday season coming up, and I know we'll talk again in a couple of months. Thanks so much.
Thank you, Jesse. Great to be with you.